Could your crypto gains really be tax-free? There was a court ruling recently in Australia where a judge says that Bitcoin is just another form of money, which means it could be exempt from capital gains tax. And in my opinion, this is one big slap to ATO's face because it can open the door to millions of dollars in refunds for all the crypto tax paid. So in this video, I'll walk you through exactly what just happened, what will happen next, and what you should do about it. Firstly, let's go through what really happened. So very recently, a former AFP or Australian Federal Police officer, William Wheatley, was charged with stealing 81.6 Bitcoin in 2019. Now back then, it was only worth $492,000. But if you fast forward to today, that's a whopping $13 million. That's a good way to hodl right there. So while deciding if he's guilty and whether he pays back $13 million or $492,000, William argued that Bitcoin isn't property. It's just information in a software and therefore can't legally be stolen. Sure. However, the judge or magistrate disagreed. He did classify Bitcoin as property, but more importantly, he said Bitcoin is like Australian money, not like shares, gold, or foreign currency. Now this matters a lot because if Bitcoin is money, exchanging it doesn't trigger capital gains tax, just like swapping $20 for two $10 notes. But if it is a capital gain tax asset, which is the ATO's current view, selling or trading Bitcoin would trigger tax on any profits. So what's next? But before that, if you guys are enjoying this video and would like more insights and tips about personal finance, tax, crypto, properties, or stocks, make sure you check out my newsletter in the description down below. Alright, let's go back to what's happening and what this could mean for crypto taxes. So if this court ruling is actually upheld, it challenges the ATO's 10-year stance that Bitcoin is a taxable property. And people who paid capital gain tax on Bitcoin might be eligible for refunds, potentially up to $1 billion in total. And after that, Bitcoin could be treated as cash, meaning buying, selling, or spending it wouldn't create a taxable event. However, the ruling only applies to Bitcoin, not other cryptocurrencies. And even if this goes ahead, it currently only affects transactions from 2019 onwards. Now you might ask, how likely is this to even happen? One very important thing to note, this court case has not been finalized. There's still an appeal pending, and even if it goes through, it has to be upheld in higher courts. And for this research, I've done a bit of digging. And a quick disclaimer beforehand, I am in no way a lawyer or financial advisor, so this information is for entertainment purposes only, not financial advice. Back to the case. If you didn't know, magistrates' courts are the lowest in terms of levels in the legal system, so their decisions don't typically set the binding precedent for higher courts or the ATO. Personally, I don't think this ruling will have much impact. Plus, the case focuses narrowly on whether someone can be charged with a specific crime, not on whether they are taxed on capital gains. So I think it's very unlikely that this will lead to any major tax changes. So the question is, what should you do next? As I mentioned before, I don't think this case will go anywhere for Bitcoin, so most likely this shouldn't affect whichever strategy you already have in place for your investments. However, as I have always been mentioning in my other videos, understanding cycles is crucial in building your wealth, and I share all of this information in my newsletter, so check it out where I have built hundreds of thousands of dollars in just the past 4 years, so follow to hear more. Well, there you have it. Do let me know what you think about this issue in the comment section down below, and if you would like to see further insights about personal finance, stocks, crypto, and also taxes and the cycle, make sure you subscribe to my channel because I will be revealing the rest of my findings very soon.